Well, I mean, I think low regulation, low tax, pro-innovation policies give people, especially specifically with regard to digital assets, if we have a digital assets framework that supports digital commodities, digital securities, digital tokens, digital ABTs, digital currencies, digital NFTs, so that people can innovate in the United States of America and spread those assets everywhere in the world, I think that'll be good for the world and good for the United States.
Michael, I'm curious because we've talked to some of your peers in the crypto industry who have talked about maybe some of the friction at times that they have felt when they've been trying to buy crypto assets under the existing regime, under Gary Gensler at the SEC, for example. You guys have obviously accumulated an awful lot of Bitcoin at MicroStrategy. Has there ever been that kind of friction? Have you seen those regulatory obstacles to what you've been doing?
Well, I think Bitcoin is the one digital asset that has the most regulatory clarity in the world because there's general universal consensus that it's a digital commodity. The friction on Bitcoin has been slow approval of the ETFs, the inability to do cash create and redemption, the slow approval of the options market on the ETFs, and resistance to banks custodying and handling Bitcoin. So that's held back the asset class. I think that a favorable crypto regime will accelerate the development of Bitcoin. And I think on the digital asset side, right, just the lack of a digital assets framework for digital currencies and digital exchanges and digital tokens has put that industry in limbo. And I think we're looking for those things to be resolved with the incoming administration, and that should accelerate growth for everybody.
And Michael, this week on the show, we did speak to Senator Kirsten Gillibrand. And I asked her, Michael, specifically about this idea of a Bitcoin strategic reserve. Listen to her response here.
I don't know what the purpose of a Bitcoin central reserve is, and I haven't really seen the details of any idea about why you would do that and why that's important. I think it would have an obvious impact of supporting the Bitcoin industry, which in and of itself isn't good or bad. I just would want to know what the reason is.
All right, Michael, so the senator not sure about the reason for it. What do you say to that? What's your response?
Bitcoin is emerging as the world's reserve capital network. If you want to store your capital for the long term and you live in Africa or Russia or China or South America or even the US, your choice is local real estate or local stocks or Bitcoin. Well, people are realizing that Bitcoin is better than real estate. It's better than stocks. There's not a single company or real estate property in Africa that you would rather own for the long term than Bitcoin. So the very simple idea is buy 20 or 25% of the Bitcoin network on behalf of the US government, catalyze the development of that world reserve capital network, and then let all the Chinese and the Russians and the foreigners sell all their other assets and buy Bitcoin, and then the money flows into the United States. If you want to put a great twist on it, dump your gold, sell all the US gold, buy Bitcoin, then the trade is free because you could buy 5 million Bitcoin for the cost of the gold. You will demonetize the entire gold asset class, and our enemies hold gold in their banks, so their assets would go to zero. Our assets would go to $100 trillion, and we would control the world's reserve capital network as well as the world's reserve currency network.
This past weekend, the White House Digital Asset Summit became the epicenter of groundbreaking dialogue that may shape the future of the global economy. At the heart of it all was Michael Saylor, the executive chairman of MicroStrategy, who made waves with his bold cryptocurrency strategy. Saylor projected an eye-popping $100 trillion enhancement in the U.S. economy through strategic integration of digital assets. Welcome back to Investocracy Crypto.
Our next guest is one of Wall Street's most vocal Bitcoin bulls, recently meeting with members of the House Financial Services Committee to discuss what he calls his digital assets framework to help the U.S. become the global crypto leader. Joining us now in a CNBC exclusive is Strategy co-founder, executive chairman Michael Saylor. Strategy announcing this weekend it delivered a Bitcoin gain of $2.6 billion so far this year. Michael, it's paid to keep buying no matter what. My question is, how much are you involved? Because I know you've met with members of the Trump administration, cabinet, family members, I think the president himself. So are you involved in advising around this strategic crypto reserve?
I've met with a bunch of senators on the Democratic and the Republican side, a bunch of Congress people, a few members of cabinet, a few members of the administration, and anybody that wants to talk. You know me, for the last 4.5 years, I'm willing to talk about Bitcoin to anybody, anywhere in the world, every day.
Yes, and we appreciate that, talking to our audience about it. So were you surprised that in the announcement over the weekend, the president mentioned other smaller coins like XRP, Solana, and Cardano, as well as Bitcoin for the Strategic Crypto Fund?
I'm not surprised. I mean, I think there's no way to interpret this other than this is bullish for Bitcoin and is bullish for the entire U.S. crypto industry. There are conservatives that view the right path forward is just a Bitcoin-only policy because Bitcoin is a commodity, an asset without an issuer, a neutral asset, and there's no controversy. But the president's adopted a more liberal economic policy, and that's his right. He's president of the United States.
Yeah, no, I'm sure you would have preferred it, though, if it was a Bitcoin-only fund.
I believe that the best thing for the country is to move forward with an enlightened, progressive policy toward digital assets. I think it's worth $100 trillion to the United States, and ultimately there's 4 different assets that people need to come to grips with. A digital commodity like Bitcoin, an asset without an issuer, backed by digital power. A digital currency like a stable coin backed by a fiat currency equivalent. A digital security, an asset with an issuer backed by a stock or a bond so we can tokenize Wall Street. And then a digital token, which is an asset with an issuer that's backed by digital utility. I think everybody's trying to come to grips with that taxonomy, and as the market gets more educated, we're going to see more progressive, constructive policy engagement.
But as it relates to the crypto fund, I guess one thing people are going to try to figure out, and what the White House is going to have to explain, is why we need that. I get that you think the price of Bitcoin is going up sharply, and you've definitely put your money where your mouth is, but it is still a speculative asset. So is it just about investment gains for the U.S. government, or is there another strategic reason, say like oil, we have that, where we would need this?
The key to keep in mind is that Bitcoin is not competing with the dollar. It's competing with international real estate, global equities, expensive money managers on Wall Street, and any long-range investment that somebody makes. And so right now we're about $2 trillion in Bitcoin. It's going to 20 trillion, then it's going to 200 trillion, then it's growing 20% a year. And that capital is coming from overseas. It's coming from China, from Russia, from Europe, from Africa, from Asia, from the 20th century to the 21st century. So what's compelling about it is if the United States takes a position in the emerging crypto economy, if it buys up 10, 20% of the Bitcoin network, we're going to pay off the national debt. And so why wouldn't that be in the interest of the United States?
Michael Saylor set the stage at the White House Digital Assets Summit. He introduced a 4-tiered framework that could revolutionize how digital assets are perceived in the economic tapestry of the United States. The framework includes digital tokens, digital securities, digital currencies, and digital commodities, each a piece in the grand puzzle Saylor believes can unlock unprecedented economic value.
I guess the question would be, we're dealing with instruments that historically, Michael, have had drawdowns of you name it. I mean, 20, 40, 50%. How much risk or what would that do to sentiment if, in fact, that was a paper loss, even momentarily, for the government?
I don't think anybody's ever lost money in the Bitcoin network holding 4 years. The United States' best investments are Alaska, Mexico, California, and Louisiana, and Manhattan. We're still holding them hundreds of years later. It's a nation state. So presumably, you want to buy Bitcoin, you want to hold it for 100 years. You know where the future's going. The AIs, the foreigners, the Europeans, the 20th century capitalists, they're all going to cyberspace. And so the United States has the ability to buy this for a nickel and pay off the national debt. It'll be the greatest economic program of the 21st century for this country.
How do you think it gets funded?
I mean, I think that I leave that to the president's working group. They'll eventually decide what they want to do and the scale they want to do it. There are a dozen people on it, the head of the Treasury, the SEC, the CFTC, Commerce, the Attorney General. The president, I'm sure, will opine.
Yeah.
I'm sure you'll have leadership from Tim Scott and French Hill, both the Republicans and the Democrats. Everybody's going to have their opinions. It's above my pay grade to decide. But what I would say is this. We bought Manhattan for 60 guilders. It was a good trade. We bought Alaska for $6 million. It was a good trade. We paid $40 million for 75% of this country. It's a good trade. We can afford it. We should buy the future.
I mean, but what? And you've done this before. You've talked about this before. But comparing a cryptocurrency digital asset that is still considered highly speculative to American cities and states.
Well, Bitcoin's not highly speculative to the 500 million people in the crypto economy. It's the best performing asset in the past 15 years, and generally the best performing asset every single year.
Saylor emphasized the necessity for streamlined regulations, envisioning a future where American businesses find seamless capital access. He advocated for easing restrictions, outlining that such a move would ensure the US dollar maintains its primacy on the global stage. Despite recent downturns in Bitcoin, Ethereum, and Solana, Saylor's optimism remains unshaken. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
As usual, you're painting a grand and vivid picture, Michael, with this kind of stuff. I know your long-term price targets are sort of almost infinite. Let's talk shorter term, and let's assume that the Bitcoin reserve doesn't happen, right? Let's assume that conditions continue as they are. Where do you see Bitcoin at the end of 2025?
You know, I don't chart it month by month, but I noticed that it's been a 60% ARR for the past 4 years and even before that point. And my model is generally that it will grow at 60% ARR, decelerating to 20% ARR over 21 years. So if you start to crank in 60%, then 58, then 56, then 54, and you put that on a scale, absent the cyclical volatility, you get to a forecast which makes sense.
Michael, quick question on that cyclical volatility, right? Because typically Bitcoin does move in these 4-year cycles, and there is a sharp pullback typically. Is that anywhere in sight, and what would be a potential catalyst for that?
I think as the asset grows and matures, the volatility decreases, and those the extremes of the drawdown decrease. The structure of the market determines the volatility, and so if you're going to forecast the structure of the market, you can't look backwards. It's like if you looked at a bicycle 4 years ago, and I show up with a motorcycle right now, it's a different set of physics. The market right now is driven by the ETFs.
As Saylor's audacious plans linger in the air, the question remains, will this be the leap America needs to reaffirm its economic leadership? The recent summit discussion unveiled a blueprint for boosting the U.S.'s financial might via digital assets, a strategy so progressive it could redefine economic norms by 2045. But what do you think? Share your thoughts. And finally, if you would like to know more about cryptocurrencies or specifically Bitcoin, go ahead and click on the next video on your screen. See you there.